Here we are in 2025 already. We're going to take a quick look back at last year, how the real estate market performed, and then we're going to give a little bit of a reading on, is the market going to be as hot as it is here in Arizona as we film this, or is it going to be a little bit cooler like Northern Michigan that we're about to head back to tomorrow?
All right, so here are your stats. So in 2024, the market was pretty much stabilized like we predicted it would because interest rates stayed relatively high. They jumped between 6 and 8%. The market cooled off a little bit, but still really hot overall, and very similar to what we saw nationally as well. So statistically speaking, we saw roughly the same number of new listings in 2024 as we saw in 23, which was we were up 2%, but relatively flat. Sales, very similar, down 1%, relatively flat. Appreciation was a much more normal 5% appreciation. And if you're wondering how long it took to sell a home and if it's easy to sell a home right now, we've got the answer for that too. So days on the market went up 22% overall, but still a lightning fast 55 days on the market.
Yeah, I think as I had shared last year, still 55 days on the market for, especially for a resort area, is lightning fast. I remember in the past 20 plus years selling real estate I would say 2018, 19, certainly pre-1000 to 20, the market was really an average of 180 days, about half a year to sell a home here. And that didn't matter whether it was a resort home or a local home. It was 6 months to get a home sold. So we're still at 55 days. That is creeping up compared to the previous year, but that's just fine. We're sort of starting to normalize a little bit. But I would definitely still classify this as a seller's market. It may be trending down or a little bit towards the middle of the road. And then as we were talking before, I was saying, even though these numbers are very similar to 23 to 24, the year over year growth rate, it doesn't quite feel that way. Even though inventory's up, you said, what, 2%?
Inventory is not necessarily up 2%, but the number of new listings was up 2%.
Okay. So, but it just doesn't feel that way. It does feel, that new homes that are coming on the market that are priced appropriately, that especially are neat and clean and remodeled or updated, which we've personally experienced that quite a bit this last year in the almost 100 homes that we sold. Those homes were really just selling.
They were popping
very
off.
quickly.
They were the ones most likely to be in multiple offers. They were the ones most likely to get, bid up over asking price for sure. So that's a preference that continues to be a strong buyer's trend. I think we should take a minute to talk about the difference in luxury. Luxury was an interesting story this year. So we saw a pretty significant increase in the number of homes priced at $1 million or more that came on the market. So 234 listings, up 44% year over year. And that days on the market, still really solid too. We expect that number in the luxury space to be a little bit bigger because not everybody's running around with $1 million to spend on a new home or even a second home. So they do take a little bit longer, but still a really fast 70 days from list to close.
Yeah, I think certainly if we went back on a 5 or 10-year study, because we've seen such rapid appreciation, that $1 million isn't quite what it was 5 years ago. However, yes, we are seeing an increase in that, which I'm not sure what necessarily. It could just be generational turnover of properties, probably really driven by the classic supply and demand. So much more demand of people coming from the West and the South that are looking to either escape the heat or just start experiencing and living that Northern Michigan dream. So there is still really strong demand.
Yeah. If you're curious about what's happening in some of the micro markets across our communities, so think Bay Harbor, think Walloon Lake, Crooked Lake, Burt Lake, Lake Charlevoix, we do a breakout at least twice a year on that to make sure we understand what's happening with those specialty markets. And we can get that to you. You'll also find it on our Instagram page and on our Facebook page in a market breakout. So we're at Winslow underscore group on Instagram and at Winslow Properties on Facebook. So you can check those out there. Or as always, if you're curious about data and what it means for you and your particular situation, if you have plans to buy or sell in the next year or know somebody who is, just reach out to us. We'll have a casual conversation, ideas that might help you sell, ideas on timing, which we have other videos on as well, and it can help you determine if 2025 might be your year to sell. And with that, Bill, what do you predict for the year ahead?
Yeah, I think it's probably going to be more of the same, would be sort of my guess. I know interest rates are really not forecasted to come down dramatically at all, if any, right now.
Mhm.
So, I don't think our market is that strongly driven by the resort market is that strongly driven by interest rates, but they certainly play a factor, though. It's not necessarily the deciding factor on whether you're going to buy $1.5 million or $2.5 million home. But it does affect the market overall.
Mhm.
So luxury, maybe not quite as much. I don't see that impacting, but certainly the overall market, it will play a little bit of a factor. But I think the demand is going to remain here. What do you believe?
I agree. I think there's some national trends. So our market is in line with what we've seen nationally. It's interesting because we took a look this morning at what the hottest markets are in the US based on 2024 data. And it was a lot of Midwestern towns like Cleveland and Pittsburgh were mentioned. And, we're certainly Midwest and we're a Midwest vacation market. So I think that says a lot for our market. So if the markets that are kind of sister markets to ours are doing well, then our market's likely to continue to do well. I think another thing to consider is we did see kind of a big boom. Part of the big boom that we experienced here in the post-COVID years of 21 and 22 was a result of people moving their primary residence to Northern Michigan because they could work remotely. One of the wild cards for me is now that companies are calling people back into offices more frequently. I think that's good for commercial real estate nationally, which we don't talk about enough, but we've seen, similar trends in commercial here in Northern Michigan that the rest of the nation has as people have been able to work more remotely. But we're seeing a lot of those buyers that bought and moved here or spend more time here because they have more flexibility in their job. We're still seeing that kind of level off. So I don't see that really causing any kind of contraction in our market. So
Yeah.
overall, I think we expect more of the same this year.
Yeah, yeah, I'd add, so we are out in Arizona at a real estate conference that we just wrapped up, a wonderful conference with agents from all different companies from
Hmm.
throughout the country and Canada as well. I'll add that the only concerning factor, and we noticed it as we talked with other agents and in some of the panels, that some of the southern markets, and particularly Florida,
Hmm.
we were seeing a rapid increase of expired listings. So an expired listing is a property that goes to market for 3 months, 6 months, maybe 9 months, or even a year
Hmm.
and does not sell. So the listing expires and it comes off the market and maybe it comes back on. We were seeing expiration rates, or agents were sharing expiration rates even north of 50%.
Hmm.
So condos in particular in Florida that were going to market, over 50% of them were not selling. So it's a
Yeah.
little bit concerning that somehow that effect that we saw throughout the South, including some in Texas that we heard about, that could trickle a little bit on a national level.
Yeah.
Good news for buyers, right? That means that prices would be leveling off, maybe an increase in inventory or some opportunities there. So maybe that's good for buyers, maybe not as good for sellers, that we might be entering a little bit of a cycle where the market starts to cool off a little bit.
I would agree with that. And I would also say that what's unique about Florida, there are two factors really driving the Florida depreciation and the lengthening in the sales cycle from the time that you list to the close, and the length and the increase in the expiration of listings that Bill just described. So the first is the most obvious, and that is the hurricanes. So there's an insurance problem that needs to be worked through, that the that Florida is going to have to kind of figure out, and it's going to probably cause the market to lag for a little while. The other one, though, that maybe people don't understand is that in the boom years, when supply was light in the last few years, Florida led the country in housing starts. So 25% of all the new housing permits in the country were in Florida. So
Wow.
they ramped up supply. And now that the market is softening a little bit, they're not in the same inventory situation that we are in Northern Michigan. So I don't think we have to have too much concern about something like that. Speaking of expiration rates, though, we did see an increase in the number of listings that expired this year. And it's a jaw-dropping number until you take a step back and look at the base number, and that is we still have 90% of the homes that are listing in Northern Michigan are actually hitting the closing table. So our expiration rate is only 10%, but that is a 50% increase year over year. So it is something to watch for sure.
Yeah.
And it kind of goes back to what we talked about. If you're priced right, you're marketed well, and you've got that, interior decor that's new, newly renovated or newly constructed, you're not going to have any problem finding a buyer.
Yeah. So thank you for sharing some of that macro clarifications there. Even though we're seeing some increases downstate as well with some of our business partners in the Metro Detroit area, Northern Michigan is a very unique market. And even within Northern Michigan, there are micro markets. So whether you're in town, whether you're on a
Mm-hmm.
Crooked Lake or Pickerel Lake, or are you on the Big Lake, are you at Bay Harbor? So each market's a little bit different. So depending on where you are, if you want to have a discussion or find out where your home value or where your micro market is headed right now, we are happy to have that conversation with you.
If you like this video, tell us. Say so in the comments, like and subscribe, and share it with a friend. Hopefully you find this helpful. We look forward to helping you and yours in 2025.